we have seen in my business, we've seen on a sort of back to that micro level versus macro level, we've seen the prices of some individual units just going through the roof because people have given up on houses. So there's just an interesting knock-on effect, but I have to say it hasn't knocked on into the high-rise market.
Now, the high-rise market is absolutely disastrous at the moment. And, of course, there are still new high-rise developments happening, built. Right? So there's about 250,000 new units of high-rise coming through on the pipeline, right? And as well as that, you've got a lot of people, property investors, who bought into high-rise some time ago, right, who can't let them. It is an absolute disaster. And now what we're seeing, of course, is people talking about building, high-rise specifically under sort of corporate structures to allow accommodation. I mean, there's going to be more and more of this stuff. Now, the planning processes are just completely all over the place here. And I'm afraid that the construction sector, particularly the high-rise sector, are calling the shots, I think, to a lot of the local authorities here. But the fact of the matter is that I wouldn't touch high-rise. I can't see any justification for it at all at the moment, unless you go for the really, really top end, the penthouse things at 4, 5, 6 million, a few of those. But the bulk of it is not that. The bulk of it is cheaply built, high-rise rabbit hutches that are designed to just be the minimum standards to pass whatever standards are there, right? They're going to deteriorate much more quickly. You can't get the tenancies, you can't get the tenants. And with the international borders now definitely locked down for a lot longer than previously thought, there's no international migration coming back. So, this is it's a real area of concern. So, again, people need, if you're thinking of buying in a particular area, right, you've got to look at that area closely. You've got to segment it. Exactly right, Veronica. You've got to segment it into the different types of property, right? Whether it's high rise, low rise, because any of the average aggregate data completely masks what is going on. The other point, of course, is there's very low listing volumes of some types of property too. So people are getting desperate and jumping onto, frankly, compromised property, because that's all that's available, right? Because the stuff that's really good goes quick. The stuff that hangs around and is less good is still available. But that's a mistake. That's a real big mistake.
I mean, I think it's the ABS building data that's a bit delayed, but there's been a bit of an uptick in high-rises selling, right? And not selling, but development approvals, basically. I mean, house and land packages have always been staying really steady, but they've actually had a huge uptick last year with COVID. But the high-rise...
No, it was home builder.
Yeah, home builder. Yeah, exactly.
Home builder was the thing, because basically you saw this ramp up and then fall again, right?
Yeah, exactly. I mean, when I said COVID linked into the policy, which was home builder, which caused the boom in sort of house and land. But I was surprised when I saw the high rises start to go up. And interestingly, it makes a lot of sense, because we're seeing clients that are so desperate, so they've missed out on a house, they've missed out on apartments, they've gone to go regionally, they can't do that. They don't want to move to the suburbs regionally, and so they want to go and buy a brand new build. And we've had multiple clients in the last couple of months come to us, and that's been their story. Their explanation was, I was desperate.